Welcome to the Invest with Rules Watch List Wednesday. It is our midweek update. I'm Scott Bennett with the great Mike Olafson. Mike, we have some really great things to share. A couple of things coming up are number one, we're going to cover market health. Number two, we're going to cover top five stocks from our billion-dollar fund manager analysis that are setting up, top five ETFs. But today, you are not Mike Olafson, Mike Tyson. Well, tell me about this quote. Where do we go?
So we'll talk more about it in a couple of minutes. But this weekend had a great dinner with some really good friends who own a whole ton of NVIDIA and AMD, done super well. But we talked about the plan. What's the plan? And you and I preach plan. Everybody should have a plan. And it just the whole thing reminded me of the great Mike Tyson quote that applies to life and really applies to the stock market, where everyone has a plan until they're punched in the face. And once you get that jarring punch, then what do you do? So we'll talk more about that in a few minutes.
Let's do it. So before we jump in, always the world's quickest disclosure. This is just information. It is not a direct solicitation to go buy or sell anything. Please always do your due diligence, manage your risk, manage your stops. You know the dance. Let's start here, Mike. What are we looking at with a long-term chart of the great NVIDIA?
So Nvidia obviously has been the darling of the stock market for what? Arguably at least a few years, this raging bull market we've been in, and you can go back further. It's the heart of AI, et cetera. So I mentioned this dinner we had with some really good friends this past weekend. They own just huge slugs of AMD and Nvidia, especially Nvidia, and they've done super well. Needless to say, you could just see by the stock chart of this long term 25-year stock chart. And but here's the interesting thing, Scott, is as we were talking, and inevitably, you and I both know that being in the business, stocks come up. So it did come up, and we're talking. And I asked them, I said, "What's your plan if Nvidia goes down another 10%?" Oh, we're going to buy more. What happens if it goes down 20%? Oh, well, we'll probably buy more. I said, what if it goes down 40%? It certainly has, and this chart shows four significant drops. And the response to that question about what if it goes down 40% was, hey, I really don't know. And that really sparked a kind of a conversation about having a plan. And we've said this ad nauseum on these videos, Scott, that all of our members, any trader investor should have a plan, whether you're buy and hold or you trade like we do, have a plan. But it really gets tested when the plan gets punched in the face. And so I think, the interesting thing about NVIDIA is, somebody could say, hey, I could buy and hold NVIDIA. I'd have for the last 25, if I had for the last 25 years, I'd be a multimillionaire. That's great. But can your plan withstand these face punches? 90% back in 2002, 75% back in 2008, 50% back in 2018, 70% in 22, the last bear market we had. Could you withstand that? My argument, I want to turn it back to you in a second here, Scott. My argument is, as humans, most of us can. The only way to withstand these, for your plan to withstand these kind of hits, is if you're either an employee of NVIDIA and in their stock purchase plan, which would be awesome, you dollar cost averaging, or you basically forget about it. You buy $10,000 of NVIDIA, you put it away, you forget about it. It's kind of, ignorance is bliss. Or the third thing is you are an abnormal human and you've got fortitude of steel and you could withstand these kind of drops. Imagine having $3 million of NVIDIA back in 22 and losing 70% of that. I know I couldn't take it. You probably couldn't either, Scott. So that was kind of my point to my friends is I didn't preach what their plan should be. I just said, have a plan, make sure it's pressure tested so that when you get punched in the face, you know how to react. What are your thoughts, Scott?
I think the best thing, again, is using tools and process. So at the very top, we are customers of Market Surge. At the very bottom is our Invest with Rules trend roadmap analysis. And members, again, thank you. You have access to this. If you don't have access to your own personal ticker tool where you can plug in any ticker you want, like NVIDIA, reach out to us. And if you're watching this and if you're just kind of discovering us and you're like, this is interesting, reach out to us or go to investwithrules.com. We would love to have you on this journey with us because every member gets their own personal ticker tool where you can put in, we give you the S&P 500, but you can put in NVIDIA. And this is what it's saying as of this morning. So very simply, we have our proprietary kind of short-term and long-term trend analysis. And I think this is the number one way to do it is to do it without emotion using trend and math.
Yeah.
And very simply, the short-term trend is up. The long-term trend is up. It's in an uptrend. You're in this green region still. The short-term trend just reemerged 2 days ago. Today would be day three. And it's a teeny pullback. The long-term trend has been going since May, and it's up 50%, which is well better than the S&P 500. Down here below, you'll see that it's number 53 on our billion-dollar fund manager daily updated rank. Every month we look at the list and we kind of who's in, who's out, but every day it gets re-ranked. And if there's multi time frame momentum, this number will become one of our top picks. But right now it's 53, so it's kind of in the middle of the hunt. So very simply, mathematically, kind of that punch in the face, it has to mathematically go from a gas to a coast. So the short-term trend is now down, and then eventually it will go from a coast to a break. Could it go from coast back to gas? That's what we just saw. Mike, any other comments on NVIDIA? I think tools like this give you an unemotional response to say,
Yeah.
in a retirement account, there's no taxes. And we're not giving you advice. This is your call. Could you hedge? Could you use some other products there's a lot of products to hedge against NVIDIA. But you're playing for 10 trillion. That's what you're playing for. You're playing for 15, 20 trillion. And the question is that means everyone on Earth has their chips and who's left. So I hope it does well for everybody. But at some point, we know the story will eventually get punched again. Mike, any final comments on NVIDIA before we move to the market?
Yeah, it's interesting. Something you just said just triggered something where they say elite athletes are able to kind of slow down time in a way and kind of see what's going on that us normal mortals can't see. What's interesting is the trend roadmap and the math kind of gives you that ability because, a 70% drop in NVIDIA or any stock doesn't typically happen in one fell swoop. Once in a while it does, granted, huge gap down, whatever, but it very seldom does. And what the trend roadmap does is it slows down that punch. And instead of just getting punched in the face, you see the punch coming via the trend roadmap and you're able to sidestep. Maybe you still get grazed a little bit, but you're able to sidestep the direct smack in the face. So I think it's super interesting. But hopefully everybody enjoyed that little story. I think we all are either in that ourselves or know folks that are kind of in that mindset.
Yeah, and feel free to share this video with them. And earnings are on the 19th, so buckle up.
There you go. There you go.
Speaking of the trend roadmap, it's telling us today that our stock market score is a 9 out of 10. That's a healthy uptrend. This is a strong market where things can still go a lot higher than we all think and imagine. A short-term, long-term uptrend. It's been going since 30 days on the short term as it had a little bit of a pullback. And then the long term's been going since May 12th. We actually, interestingly enough, we took a position in a momentum version of the S&P 500 because it triggered like for us, it was an ad or a buy signal earlier in April. So far so good. Mike, any comments on the market before we go into the gauges?
Nah, just another super interesting bounce off the 50. And yeah, now in another little mini consolidation range. So the next week or two should be quite interesting.
Yeah, and if you're looking at this, if you're a market surge customer like us, the 21 EMA is in green, the red is the S&P, sorry, the 50-day simple moving average, I'm losing my
Yep.
marbles here, and then the black is the 200-day.
Got punched in the face.
Yeah, Mike just got me. I would be literally knocked out in like a millisecond. That's how I
Oh,
would.
same here. Same here.
Bye bye. Yeah, you can see the undercut and the rally off the 50, and so far we'll see how it goes. I mean, the reality is no one knows, but we're following the trend. So let's go to the gauges. Mike, why don't you share what you're seeing?
So top four gauges, we've got the stock market score we've talked about at a 9 out of 10. Our percent invested at an 86%. So kind of right in that sweet spot versus the market score being a 9. So we're kind of invested significantly, but we still have some cash, some powder dry. Portfolio beta 0.8. So we're kind of in that space or about the market, a little bit less. And then the one I really, really look at every day, multiple times a day is portfolio heat. we're at a minus 5.4%. If all of our stops got hit over the next, say, 1 to 2 days, we'd lose approximately 5.4% in the portfolio. So that's kind of in that yellow zone, orange zone, where it's getting higher. We're watching it, but it's not in the red zone. So we're okay with where we're at now with risk. Scott, you want to take the strength gauges?
Yeah, so people talk a lot about rotation, and this is showing rotation on display. So you're going back roughly 2 weeks, and you're saying off to the right is what's really strong, and what's really weak is off to the left. So relative weakness. And what you're seeing very clearly is healthcare is top of the heap. We would call that overheated because of the relative strength index has surpassed 68. So it's kind of saying, hey, the move happened. We have exposure in biotech, we have exposure in healthcare. We're very happy with that. International has been acting very strong. This past week, and since we've had a lot of exposure, but we've added even more international exposure. And gold, we're at a half position. It's kind of working its way to the left. You're seeing things like the S&P move to the left. You're seeing energy. So this is an interesting rotation happening where you're seeing healthcare and energy and some real estate start to move this way in materials. And you're seeing some real weakness in large cap tech, which has, people always say, it's like, how can this keep happening? There's no breadth in the market. And lo and behold, now you're getting more breadth. So, any other comments on the mega caps below or any other thoughts?
No, no. Yeah, no, I think you nailed it. Let's move on, start getting into some nitty gritty here.
Cool. And again, this is in the members area under market health. So you can see this every day. We update it multiple, usually 2 times a day at least. But you can kind of see if you are an NVIDIA holder, it's right here. That's helpful. So, okay, follow the big money. Here's our process. This is what we very much believe in. There's always have a core in our belief system. We follow big money, we follow the trend, and we follow risk management rules. That's how you become a dud at a dinner is when someone's all happy about NVIDIA, you talk about the risk. I'm totally joking. You're not a dud. You're a fantastic risk management human.
Well, Scott, I'm so impressed that you didn't gig me back there when I was talking about actually having friends. That Mike, you really have friends, and I thank you for not jumping on me for that one.
No, you're a
So there
social
you go.
butter. You're a social butterfly.
Oh yeah.
They're going to start. You have to risk manage that if you're talking about risk too much. You're going to lose. Okay, we're going to go through the funnel. So we have a list of around 100 stocks that we track every single day. We re-rank this. Here's the top 10. We're really proud of this list. We think we fish from here. We think it's phenomenal. So anything in gray, in full disclosure, we own in our advisory practice, which is a separate business, in our newsletter, personally. So as an example, you'll see the top 10 rated as of last night. We update this before trading window at the end of the day, before like around, call it 2 o'clock East Coast time. And very simply, what you'll notice is out of the roughly 100 tickers, 57 are on gas, 10 are on U-turn, and we can show you what those charts. So they're coming off the bottom. But you're seeing a lot of the overheats and the coasts and the break signals dissipate, and the market's showing more love and more spread. So you're seeing Micron at the top of the heap. I mean, what a year! Unbelievable, right? Western Digital, Insmed, Cencora, Lumentum. I mean, these are some rocket ships. And very simply, we follow this trend roadmap analysis off to your right, and then we'll rank this starting at the month, and we'll see where it's moving. If it's like the billboard, if the song is more popular and the stock is doing great, it will flow to the top of our report. And who would have thought a couple of the tickers that we own are doing really, really well this year? We're not perfect, but we try really hard. Any comments on the stocks before I'll have you talk about our ETF rank?
I'll just go. I'll just touch on one thing that we very seldom talk about, but on the far right of the screen, you've got a column current volume percent of average. And all that does is we don't look at volume significantly, or, when we're doing our analysis, that's kind of done on a monthly basis. We're looking at accumulation. So daily volume is not something that really concerns us too much. But for those that are into tracking daily volume, during the course of the day, that column just kind of gives you the percent of the average volume. Needless to say, early in the morning, it's all down big time, minus 90.5%, because the day is just beginning. But as you get closer to that close, you'll see that number increase. And if you see it happen to go over 100%, that's telling you that there's some volume coming into that ticker for the day. So you just want to mention that.
Love it. All right, ETFs. So we own a lot of this stuff. We are proponents of momentum that prices can keep going up as much as you don't think they can. So we'll talk more about silver as the time goes on. I think Japan was on our watch list today. So again, we're funneling from these lists and then we'll talk about the final funnel. But again, gas signals are showing back up. And you'll see that it's a lot of precious metals, international, healthcare, biotech type tickers. So I hope that's a clear sign of what is really acting very well in this market. And you'll see comparative year to date, most of these are far surpassing the return of the S&P 500. Finally, let's get to our watch list, then we'll dive in chart by chart. At the very top is the top $5 billion fund managers stocks that are on gas signal, short-term, long-term uptrend, that are making the turn, and they're within our risk parameters. So if the stock is like already taken off up 20% on a gap up, we have to have some restraint here. And then we have the top five ETFs that are on our gas list that are making the turn. And then we have new signal changes today ranked. So very simply, that is usually a very early entry and we very much pay attention. Let's dive in before, unless you have any thoughts.
Yeah, let's do it.
Okay, first ticker. That was fun. First ticker, we'll go to Caterpillar. So I want to cover Cat first and I'll go to the next one.
Yeah, Caterpillar has been a stock that's kind of been dancing in and out of the billion-dollar fund manager list for a few years now, but it's number 6 on the list now on a clear gas signal with short-term and long-term trends aligned up. It's been in the short-term uptrend for 68 days now, and you can kind of see where that happened back in the August to September timeframe, up a really nice 37%. So on the market surge chart, just to for those not familiar with it, you get the blue zone above that consolidation. That was the buy area. And now it's in the green zone, which kind of IBD says, hey, that is potential profit taking. We don't necessarily proactively profit take. We want to let that trend run. And so with Caterpillar here, we did in this consolidation over the last, let's call it week or two, after that gap up, we have added a half position at Caterpillar. And so far, so good. Any comments or anything I missed, Scott?
No, you have earnings acceleration, and you had a great gap up on earnings, and you had a normal kind of a gap fill to some extent, and fully fill it, but you had a fill, and then this is a strong stock that the funds are after, so are we. So number 6 on our report. We'll go to water infrastructure, so plumbing, heating products. We have Ferguson. Ferguson is in a short-term and long-term uptrend, number 9 on our report, and it's just breaking out. We have a full position on Ferguson in full disclosure. This isn't an earnings burner, 7 to 10% earnings growth, but a lot of these funds, they want to have some extreme growth and then some kind of steady growth. And that's what Ferguson does provide. If we're doing infrastructure projects globally, you need these products. Obviously, there's risk, but it's going to be a slower mover for those that are looking for more, a little less volatility in their life. But obviously, there can be times where it has a big gap up, and it's really held that ever since. A quick retest, a shakeout, and off it goes. So there's Ferguson. What do you think about on? I think we also own a full position in Valero. What are your thoughts on Valero?
So Valero, and we saw when we were looking at the sector strength gauges how energy is kind of kicking it to the right, showing strength. And Valero could be considered a poster child for what's going on. As you can see, I mean, it's just from a pure chart standpoint, the last, let's call it 5 months, it's done a beautiful job of making higher highs, higher lows. It just came out of that recent consolidation and market surge is showing, and it's now in the buy zone above that 178.43 pivot. And so really has done a nice job. And that's why we added the half and then added the other half to create a full position over the last couple of weeks. I will point out, Scott, that and we've kind of said this a few times or on many videos that our trend roadmap, the gas signal, which occurred 21 days ago, occurred, yes, exactly where you're pointing, kind of in the bottom third of that consolidation that market surge is showing, which is just kind of that early cheat, as Minervini calls it, that kind of helps you get in. And that's in an area where you'd like to get in to be able to build a cushion before it actually gets to the true buy zone and or the pivot point and then add it. Anything I missed?
Nope, I like it. Unity software, so real time 2D, 3D. This has earnings. They're maybe not going to be growing as fast in 26, but 25 this year, really booming earnings. and booming sales. So you can see a very rough cup formation. And we're getting an early entry signal. We don't own this in full disclosure. Short term, long term uptrend. The short term has been going for 7 days, and you can see where that would have happened. There's your trend line and then breakout. And the long term's been going since April, so very close to kind of where the market really made a big turn. It's up 95% since then. So if you kind of come all the way back here where you would have got that signal. So earnings in January. But if this is a video game maker software, obviously it's not a PE that's on the cheap side, but that's life. So the funds are going after on this pullback.
Yeah.
They're going after Unity, so that's on our radar. Comments, or I'll keep pivoting.
Now let's keep going.
Why don't you cover Howmet?
So defense has been a sector that has been kind of off and on hot this year with all the things going on in the world, kind of global conflict, etc. Howmet is one of those aerospace companies in that sector. And as you can see, it's had a pretty darn steady ride over the last 30 days since it went to the last gas signal. But check out the long-term signal. 743 days ago. So if I do my rough math, that's going on, that's over 2 years now, 2 calendar years, 375% gain. And you can see how steady in this 1 year chart it's been. It flirted with the 200-day moving average, that black line, once, and was able to kind of bounce right off of it, and has had this steady ride up. So Howmet is one of those interesting stocks where, in fact, a lot of the ones we're talking about, Ferguson, Caterpillar, Howmet, they're not these super sexy AI driven stocks, but you could see the type of performance you could get. Other thoughts?
Love it. We're going to move to some ETFs now that are hitting our radar. Now, we've had silver for a while. We had a full position. We did some trimming over here, and then we re-added our secondary position. So we had the kind of core satellite, first core position, second position. So we re-added to our second position. Short-term, long-term uptrend. Obviously, this is more of a kind of a gold on juice a little bit. So silver, physical silver. Obviously, this is an ETF that's in theory, iShares has the silver in a vault somewhere. But 5 days, you got the signal. It's been going since 2 days after the absolute low in the market for almost 70% return. And silver has made a price all-time high. So it's a price was at $50 back in 2011 and it retested on an inflationary basis. It's nowhere near that, but this has really been booming. And that's the why we have a big position in silver. We have a position in silver miners too, in full disclosure. That's been really productive as well. We've sold a few times into strength there. Comments on silver before I pivot?
Yeah, quick curveball question, Scott. So sorry, get your catcher's mitt on. So when it comes to precious metals, obviously the big ones are silver and gold, what everybody looks at. Then you got the others. But with silver and gold, what's the correlation level? What's your thought on gold versus silver, and how the market looks at them? Do you have any kind of thesis on this at all?
Yeah, it's a good question. I'd say a large majority of investors, there's no such thing as like right or wrong, but they consider gold more of a currency and they consider silver more of a commodity. So whether
Yeah,
it's in industrial products, you could make arguments for palladium, platinum, copper, and you can kind of spread out.
yeah,
But gold's made the first move, and then that could lead to the other additional commodity boom in the hard assets. So I hope that's helpful. So if you're a central
yeah,
bank and you are concerned, you would probably be stacking up gold.
yeah.
As a secondary, you may be stacking up silver because it's on a ratio basis cheaper. So that's silver. And speaking of overseas, who might be holding a lot of this stuff is Japan. So Japan, short-term, long-term uptrend. It is been going for about 28 days, and it just keeps riding these higher highs, higher lows. It obviously had a little bit of a shakeout here, but you can kind of see where market surge is drawing the higher highs and the higher lows. Any thoughts on Japan stocks? Japanese stocks are really been productive.
Yeah, and from a pure charter standpoint, what a beauty! Higher highs, higher lows, and it's now flirting with. Actually, it is at 1 year, 52-week high. Yeah,
Yeah, we
stuff.
have a position in Japanese ETF, that one we just showed, and we
Yep.
actually have We added a new position in international momentum. We've tried this a few times. Mike, what are your thoughts as this is in the breakout zone according to Market Surge, but it falls into our world as well?
Yeah, so it's the international momentum, just to kind of cue it up briefly, is it's basically taking the international stock indexes and doing a, I believe it's once every 6 month cut of taking the most powerful every 6 months of the international stocks and putting that into IMTM. It's similar to SPMO, which you touched on earlier, where that's basically taking the cream of the crop every 6 months of the S&P 500. This is the international version. And as you can see from a price action standpoint, just coming out of a consolidation in the blue market search buy zone, we added it back in. So we're managing risk and let's see what happens.
Yeah, and you can kind of conceptually think through it like an SPMO would own more of the hottest stocks. It would own less of the
Yeah.
consumer staples that have been dragging. We're also showing gold miners is in a short-term, long-term uptrend. 2 days ago, you got the hey hello, so it'd be right here on the gap up. Short-term, long-term uptrend. This has been a great trend. Obviously, we have some silver miners, which has been solving that need for us. But in a trend following go anywhere strategy, this has been one of the hottest parts of the market. As the price of gold increases, its earnings increase because it's as you dig it out of the ground, you can sell it for a whole lot more, and the earnings and margins and everything else goes with it. So, any thoughts on gold miners?
No, no, let's keep moving.
Cool. Same story for copper miners.
Yep.
Obviously, this has more to do with industrial and building infrastructure, whether it's homes, buildings, data centers, the whole world, the whole works. But you saw a big run, and you're just in a nice consolidation pattern. So this could really set up again, and we've got that another signal. There's your trend line, there's your breakout, and there's your heads up. So if it kind of comes to the forefront of our list, we'll be there. But this is really interesting. So copper miners. So I want to be clear, international commodities, the hard assets are definitely showing up on our reports. So that should be a tell for anybody. And then let's move over to the new signal changes. Mike, what are your thoughts on Corteva?
Well, Corteva, I actually I've looked at this a few times over the past several months, and I didn't really know what they did, but they're in the agricultural space. And if you look at this one, it's super interesting. It's had kind of a bumpy year, a lot of volatility, but now you've got this consolidation. In fact, Market Surge is showing this really large, let's call it 60 to 76 consolidation, and it's working its way up in that base. And what our gas signal did 7 days ago, it kind of gave you that super low trigger that, hey, something's happening here. And I'm sure it went through U-turn first, I'm guessing. Something's happening here, and here, look at me. And so this, if you're not in this one, looking to kind of diversify, this could be an interesting, relatively low risk position to take a bite out of. But being this place in the base, I don't know about you, Scott, but I'd only be doing a half position myself. What are your thoughts?
Yeah, this is grounds for smaller position sizing because it could hit the
Yeah,
200-day simple and roll back down
exactly.
and
Yeah.
set up. There's then it would form more of a cup-like pattern or a flat base. I would say flat base, not a cup. And then it would kind of chop around 65 before making another big push higher. Again, this would be if the agricultural corn, soy, and all the seed oils are pumping. So who knows? It's just an early tell. Another early tell is XLB Materials, which has been a clunker this year. Short-term, long-term uptrend. This is coming to a theater near you. So you're either going to run into resistance, but we're showing that it's a teeny breakout. It's over the 200-day simple. It's heading towards the 50-day simple. So could it maybe chop around here before making another run? The goal of these new signals is can you be alerted earlier to a change in trend? That is the mission. And then, Mike, we'll have you finish us off with KKR and the global alt asset management business.
Yeah, another one. This is an interesting one that looks faintly like Corteva, that, just some choppiness this year, a lot of, kind of volatility showing up. It's in consolidation currently. And once again, just like Scott was saying, you've got this early tell, in this case, a U turn. So it's still in mathematically a long term downtrend, but it's now in a short term uptrend. And that's a U turn in our books. and this is what you got. Like at the lower part of this massive, I guess markets are just showing a cup. This is kind of the massive bizarre handle, and you're getting that early tell. So once again, if you were to take a body KKR, it's a relatively low risk. Make sure that you set it up that way. And I'd say position size lower because of all the volatility. What say you?
Yeah, 86 on our report, so it's at the bottom tranche of our
Yep,
analysis, and it's coming off the bottom. And I would say, could there be systemic risk in the private equity, private asset space where it's much more illiquid? It's possible. And again, that's why we manage risk. So could you just kind of set your stop and use some sort of a trailing stop? So if it does roll over, it's not like you're going to be dealing with it down below 100.
exactly.
But could it go from 123 to 130? That wouldn't shock me at all. So we're going to pause there. And again, thank you for letting us go through our watch list. We enjoy it and we hope it helps you to conceptualize kind of what you're looking at. We follow the trend, we follow big money, we follow risk management rules. But first, if you're a member of Invest with Rules, thank you. For any self-directed investor, we hope this helps you save time, provide you good insights quickly. That's important to us. If you have questions, hello@investwithrules.com. If this is something that's of interest to you or your friends, just reach out to us. And if you're like, this is amazing, but I unfortunately just don't have the time, and I really want someone as a separate business, our fiduciary arm, where we use a lot of the same research. We have different strategies beyond just the trend roadmap, but that is IWR Advisors. Hello at IWR Advisors. This is something where we've slowly growing our advisory practice to help. Our hope is 100 amazing families. Mike, what say you on the watch list Wednesday to wrap us up?
Yeah, thanks very much for your time. Hope you got some cool stuff out of this. We always have fun doing this. And just a quick note: if you have any kind of member testimonial of how you've been doing with investment rules, any kind of feedback, let us know. And we're going to be gathering up some recent testimonials as well. For example, we've got a member that joined us at the very beginning of the year who's doing phenomenally well. We heard from him a couple of days ago, so we're going to be gathering those up just so people can see, and we'll kind of share what other people are doing with investment rules. So thank you very much. Have a great rest of the week. We'll see you on Friday.
Awesome. Again, thanks again. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.